21 mark for the very first time. It has breached those levels and definitely is the weakness throughout that we have seen on Indian rupee. But what's the way forward and what are the factors that are leading to this significant weakness? We are being joined by Anindya Banerjee, head commodity and currency at Kotak Securities, joining us. Hi, very good morning, Mr. Banerjee, and seems like not a great one for the rupee movement. Firstly, if you can help us understand what are the factors that are leading to such weakness, if you can highlight a few for our viewers.
Very good morning, and thank you for having me. Yes, we are past the 91 mark, a fresh all-time low for the Indian rupee, and the Indian rupee continues to be one of the weakest currencies across the top 25, 26 currencies in the world this year. See, if you look at the FPI flows for the month of December, we are almost a negative 3 billion. That's almost the second highest monthly outflow this year after Jan. And we are still 2 weeks to go for the month. And with the yen carry trade unwinding, and with the Bank of Japan expected to hike rates in the upcoming meeting this Friday, the global situation is not looking good, which can trigger further outflows and put pressure on the rupee. The domestic sentiments around the trade deal has not improved. The trade war is still on. So all of those are there. RBI intervention is there, but it's not that aggressive as of now. So probably RBI is trying to use the currency as a supporting tool for the exporters. So overall, the outlook for the rupee looks challenging unless and until RBI comes in quite aggressively over the next 1 week or so.
Anindya, Anindya, requesting you to stay on. We're also joined by Mr. Naveen, Mathur, Director Commodities and Currency from Anand, Rathi, Share and Stock Brokers. Hi and welcome to the show. Taking a leaf from what Anindya tried to explain, that the global outlook doesn't look in favorable for rupee's trajectory. But I also want to understand your comment on this, looking at the weakness and also with respect to the trade deficit. Now, if we talk about November, trade deficit has come down to almost $24.53 billion from 41.64 billion in October. Now, it is believed that this could take away slight pressure, and the further depreciation looks capped. What's your take on this with respect to the trade deficit numbers we're also anticipated this week?
Yeah, thank you very much. I think what Anindya said, I totally agree with him. But I think that the RBI will not intervene till the trade deficit numbers become reasonable. Yes, the last month it was around $24.5 billion, which was around $41.7 billion in October. So that's one of the positive news coming in, but you should also understand that this particular trade deficit, which has narrowed in November, is largely due to the exports. So the export competitiveness, because of the rupee depreciation, the RBI would be looking into it. And I think the exports would be critical for India to contain the deficit numbers. So I think that's what the strategy is. Seems to be from the regulator that they want to get the exports competitiveness in turn to reduce, or I would say narrow. At the same time, the fundamentals for India remains positive. Our manufacturing, our services index are doing pretty well. Even the GDP numbers for the last 2 quarters have come pretty much beyond the expectation. So I think it's just a matter of time that the rupee depreciation would hold on. And I think we would see the levels of around 88 to 90 in the near future once the current the trade deficit numbers get to a reasonable level. Even the FX reserves have been up by $1.03 billion to around 6.26. And that's a very strong kitty to hold the rupee if RBI wants to intervene. So that's what my take would be.
All right, interesting points there. Both of you, since are on the consensus that for now, RBI is not expected to get or intervene quite aggressively. And yes, of course, there are global factors that are at play. But Anindya, what's your worst case scenario? Till what level rupee will hit before it makes a bounce back?
Yeah, as I said, the global environment is looking challenging, and generally what we have seen over the past 5 years or so that when the risk sentiment starts, especially during the second half of December, we get to see some large moves in the market. If such a thing happens after the BOJ meeting, I think it won't be surprising to see the USD INR head towards 92 or 92 quarter, unless, as I said, the big thing is the RBI intervention. And as long as RBI is not intervening aggressively, 92 quarter can happen this over the next 1 week or so.
Right, so 92 quarter is the expected weakness figure as far as rupee is concerned. Thank you so much, both of you, for taking time out and helping our viewers understand this weakness in rupee and depreciation. Thank you so much. But with that, it's time for a short break on Buy Now, Sell Now also. But then our experts are there live with us. You can still send across your stock-specific queries in the number that's flashing on top of the screen.